Hi, Mike Muncey, and welcome to Mike's Market in a Minute. Well, what a remarkable couple of weeks it's been for the real estate industry. The election result, well, it's taken some of those proposed changes off the table completely. And I guess it's given some vendors and buyers some real certainty and stability in the fact that the status quo is going to be the case as we go forward. One really interesting thing that we've noted is APRA, the regulatory body, has flagged some changes to the way they're going to look at serviceability. Now, for those not too familiar with it, at the moment, if you're going to get a loan, they benchmark your rate of what you can afford to repay at 7.5%. They're actually looking at scrapping that and only making it 2.5% above whatever rate you're going to borrow at. Now, in truth, this is what it means. That you might mean that you can get back into the market and borrow. It might mean that you instead now you could buy a 4-bedroom home as opposed to a 3-bedroom home, but it certainly will make a difference to buyer sentiment. The RBA has also flagged some interest rate changes, and Bill Evans from Westpac, and they're expecting upwards of 0.75% reduction of the cash rate, which is also going to provide some impetus and some momentum. What we are seeing is low volume, and that's certainly seen the recovery. CoreLogic's data has put out some information that our levels of actual sales that are occurring in our market are almost akin to the mid-90s levels. So that tells us that that's also helped to keep the market very, very stable indeed. I'll leave you with a final quote from Warren Buffett, which is, "Don't be afraid to buy the dip." So given the recent changes in our market and how it's affected your situation, we'd love to discuss your plans, help you with the strategy. Call us on the number below. We'll talk to you soon.